Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 13th, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Stocks are making new records, but the breadth of the advance is decreasing, so I'll show you what I mean. This is creating a divergence. Also, small caps have not yet made the new records, and this is adding to the divergence. Treasury bonds at the same time have held a crucial support level, and we'll see if there's more fear that's coming back into the markets. I'll give an example of a recent trade. Pfizer up over 26% since recent alert. We'll look at more detailed analysis of dollar, gold, and silver. And psychology of trading. I had the Bitcoin. I was short Bitcoin. Clearly didn't really work in my favor. So several things here. Number one is you have to admit defeat and move on with your life. Number two, you have to control your risk so that you don't go broke from one trade. And if you have my subscriptions, elite newsletter where we trade mostly large caps, ETFs, and some commodities and Forex, that we're going to cover all of these stocks there in a separate newsletter. And if you have my speculator newsletter, we're going to cover all of these stocks. There's quite a bit you can see. Very interesting, cool speculative breakouts. All right, let's get to it. S&P 500 again made a new all-time record high. Hopefully the chart will load. There it is. So all-time record highs once again. So as always, I'm using my indicators. You can see them on this chart, these lines, the green, blue, red, and yellow lines. They're available for TradingView.com. You can find out more by clicking in the description of the video. So pretty much I use them exclusively, and you can see them in action here. A very nice alert way back when in April, May of last year. You can see the breakout, and basically stocks never looked back since then. And again, we're making new all-time record highs. So on the surface, it looks good. And generally speaking, it is a good sign when stocks are making new records. Now, I also, I used to look at this quite a bit. This is what's called advanced decline issues. So, very briefly, what does this mean? It means that if a stock, goes up, it means it's advancing, and if a stock goes down, it means it's declining. And this can be calculated every day. So each day, some stocks go up, some stocks go down. Now, this chart here, this chart right here is showing this advanced decline issues. So how many stocks advance subtracted from, or rather decline subtracted from advances on daily chart. And this is what's called cumulative. So yesterday's number would be added to today's number. Why? Because if we make it just normal daily thing, it will be completely meaningless. So I'm going to show you what I mean. If it's cumulative, it actually has a meaning. Now if it's this computer is kind of slow today. If it's just daily numbers, you can see it's an ungodly mess. It makes nothing. It just makes no sense whatsoever. So what we need to do is we need to change this to cumulative. So in other words, yesterday number would be added to today's number, and then it would actually make some sense. So S&P has been making new records, and in fact today on 13th of March, today is the 13th of August 2021, we made a new record. So now on this chart we can see that this line, advances less declines, made a new high right there on the 2nd of July, first 2nd of July, and since then it kind of was dragging, was moving lower. So at the same time, S&P has been making new records. What does that mean? That means it's a divergence. So we were making, moving lower on a number of stocks that are making new highs. But because the stocks are still on average are making new records, that means that there is more larger cap stocks that are driving the market. The smaller caps are not as relevant, and also they are not contributing, so to speak, to the general market. So that this is called the breadth of the advance. How broad is the advance? And right this instant, the advance is not terribly broad. We can also look at what's called volume. New York Stock Exchange advances less declines volume. So how much volume, let's say, is going higher, how much volume is, let's say, going lower, and then we can construct a line out of that as well. And you can also see it pretty clearly. There's the high in June, and then from then on we can see new, it's been moving lower. So again, this is not a great sign, and this is showing that the breadth of the advance is getting weaker, getting thinner. So this is something I think to be concerned about, because this is, you can see that since even October of last year we had nothing of this nature, maybe a little bit, but this was really relatively significant. So we should be paying attention to this, and I am paying attention to it. So moving further, we can look at Dow Jones. Dow Jones, basically the same thing, made a new record just recently. One second, this chart is loading kind of slowly today. So yeah, today actually another new all-time record high. Dow Jones overall very similar picture. Nothing is separate, different from S&P, in a sense of correlations are high between Dow Jones and S&P, and breakouts occurred back in April, May of last year, and since then we're just basically sitting in the position. There's the breakout in May of last year. And if you have my indicators, then you can simply trail at the blue support resistance line. This is where I trail. NASDAQ also made a new record relatively recently. S&P did make a new record. NASDAQ made a new record on the 5th of August, so no new record this week. But overall, the correlations are very high. I'm going to show you the correlations. So correlation coefficient is how closely do two securities follow one another, and this is correlation to S&P, and you can see it's extremely positive. Now, this is what concerns me, in addition to the divergence between the advanced decline line, and this is also a small divergence. Here we see IWM small caps, Russell 2000 small caps, made a new record here in March, and since then it was not able to make a new record. So this is adding to the divergences, and it is concerning. So I think we could easily see a correction of some sort. And, how deep of this correction we will get, nobody really knows. It really, you really need to control your risk through various means. For example, each position needs to be controlled for risk. How much are you buying for each position? What if you are wrong? What if the position goes against you? How much money will you lose? So this is positioning, controlling the risk each position. Additionally, since stocks correlate highly to other stocks, you need to think about how many stock positions do you have. Maybe if you have all of your portfolio in stocks, and then the entire market collapses, then you will, suffer more. If you have some stocks, some commodities, some bonds, some Forex, and maybe some cryptos, that's another way to diversify. So this is kind of like multiple levels of diversification and risk controls. And all of those I can teach you, so if you're interested, sign up on my website. So right now what I'm seeing here is no new record highs for Russell since March, and additionally I just showed you a divergence between the breadth of the market. So the market is making new records on in other words, larger cap stocks are driving the market higher, and smaller cap stocks are barely participating. Okay, so let's move further. Right now we're going to look at Treasuries, TLT. So Treasury bonds, have held support. So I think the Treasury bonds are in a bear market. They started the bear market back in January of this year. The trades were very successful. So latest alert, I actually sent this to my subscribers, but I think it's worthwhile to show this to the people here on a general video as well, kind of like a public service, I guess. So we're looking right here on Treasury bonds, and latest bearish signal was right there on the 9th of July. And so far it really hasn't worked out. So additionally, you can see that prices came down here towards the red support resistance line on the 11th and 12th of August, and then today they kind of gapped higher and bounced off and closed significantly higher. So this is a strong support. This is a strong finish today. So to me this looks like support was held today, 11th and 12th of August. And then we can see projecting into the future. I have a 6.0 version where I can project the lines into the future. Now I'm not projecting the prices into the future, I'm projecting my lines into the future. So the lines, what they're showing me is that this blue support resistance line, which is bullish levels where I would be buying this Treasury bonds, are getting closer to price action. And this is showing me that additionally, since we held support here and we're approaching bullish levels, and then we're seeing additionally what I just showed you, that there's a divergence in the stock market even though we're making new records. If I read the news, there is all kinds of delta variants, lambda variants running rampant, or everywhere. There's a consumer sentiment that plummeted all of a sudden. So this is all fear, fearful things that are making people worry, and then this is not helpful. So treasuries are bought usually when there is fear in the markets, and so what I'm seeing is there's increasing amount of fear. Either way, we are well positioned to trade, stocks up or down, and we can trade treasuries up or down. Right now I think they're still bearish, but if they reach this blue support resistance line, I have no problem switching my positions and going, buying them. If that happens, most likely stocks would come under strong pressure. Here's why. So I'm going to show you again correlations. So this red line, or rather red thing here, bar chart, or rather mountain chart. So it is showing correlation, and you can see that the correlation between S&P 500 and this treasuries is quite negative. So usually, not always, but quite often, it's negative. Usually when stocks go up, treasuries go down, and this is normal sort of behavior. if we're gonna see something of this nature, what I just showed, that we're seeing more fear in the markets, then it would make sense when or if the treasuries break out to start buying them. And the treasury bond levels where we would be buying are not that far off. They're only a few percentage points away. This is less than 2% away, you see. So let's see where this gets us going into October, I guess. Yeah, very interesting, right? Okay, so I wanted to show a stock, Pfizer. This is a recent alert, recent trade. Very, straightforward trade. You can kind of clearly see it on this chart. Where would you buy? You want to be buying on close above this blue support resistance line. And there it is. There's the actual alert that happened on 16th of April. You had another opportunity to get in right there on 8th of July. I didn't send an alert for some reason. Sometimes I miss this. But if you have my indicators, and you can find out more about them, you can just buy yourself and be your own best analyst. So this is what's basically happening. This is the easy way to trade. You buy and close above the blue support resistance line. You set your initial stop at the yellow line. Once your target is reached, and your target is around the green line, once your target is reached, you move your stop to entry, and then you trail higher. And the more you hold, the better usually. So for longer term holds, usually they win in the long term. Okay, moving on to Forex universe, here's dollar. So dollar until very recently was in a bear market. But something happened here on the 13th of July. We see a breakout where I'm hovering right now. We had another bullish signal right there on 6th of August. But right now, today we had a really big red candle, and it's not impossible that we're gonna roll over. Breakouts do fail. I am not saying that this one will fail, but it's possible that this breakout will fail. So we need to kind of know where our stops are, know what is our diversification and all that stuff. So you don't want to bet the entirety of your account on just one transaction. You want to, put a small amount, 1%, 2%, 3%, maybe 5% of the account per transaction. If you're wrong, you're not going to be completely wiped out, and you can trade another day. So here, looking at gold, why am I looking at gold? Because dollar and gold, gold is traded in dollars, so XAU divided by USD. So if dollar is getting bigger, it is pulling this currency pair lower. In fact, we had a huge spike into 9th of August. Unfortunately, it was a Sunday night, so I couldn't really cash in on it. But if you had a Forex account, you were able to short it right there on the 16th of July. You came in really, really nice there. But you see how this big spike, it was immediately bought, and now we're seeing strong move higher. So there is a good chance we're going to reverse. This is especially because it looks like we're touched the lows from March. We touched the lows from late March, and this candle, it just looks very much like the bottom. So is this the bottom for gold? It's possible. Like I said, if dollar decides to fail here and just roll over to the downside, then gold will benefit. Absolutely, yes. Here's silver also. I had a position, I shorted it right there on 6th of August, SLV. I'm gonna show it to you. So here's my trade. I thought it's gonna get much stronger, much bigger gain, but nothing really came out of it. So I shorted silver right there on 6th of August. I bought puts. So puts means I'm buying, I'm placing a bearish bet. Next day immediately it went in my favor, and so I bought those puts at $3.10 each. Next day silver dropped, and I sold 1/4 at $3.45. So you can see it's already a sizable gain from just overnight. But then, like I just showed you, the way this price action is for silver, and for gold and for dollar, I'm just not really feeling it. So this sure feels like a possible bottom. So I decided to go ahead and close my position. So I closed my position in silver today. Still a decent gain. I bought it at 310, 325. I sold at 325. So not a huge gain, but overall still a profitable trade. And this is what counts. You want to have as many of those profitable trades as possible. So to summarize, basically I'm thinking that there is a possibility the dollar will roll over and continue lower. In that case, we can see I wouldn't necessarily call it a collapse of the dollar, but we could see a strong move down for the dollar. By extension, we could see a strong move up for the gold. But once again, we need to wait and see where this goes. Right this instant, I'm still thinking that gold is in a bear market. So resistance level is right there, 1795. So let's look and see where we get in next week. If we touch the 1795, let's see what happens there. For silver, if we touch $24.84, $24.84, and let's see what happens there. And here's Bitcoin. So if you listen to my videos, I was kind of like, this is right there, especially in July, end of July here, beginning of July. I decided to put my money where my mouth is, and I actually shorted it right there, 13th of July, with my stop above this blue support resistance line. So again, how much did I short it with? How many percent of my account did I bet? Okay, so I bet like 1 or 2% of my account. I don't remember exactly how much. What I'm trying to tell you is, you can sure, you hear all this news about people making huge bets, like they would take $1 million and they would buy Bitcoin, and sometimes they are right, and sometimes they become multimillionaires. Great, good for them. Okay, but you also hear lots of stories about some other people who would do something similar, and then they would buy a bunch of options on GameStop, for example, and lose lots of money. Okay, so that's called risk control. So how much money are you going to lose if you're wrong? Okay, so every single trade needs to have risk control, and in this case it was the same thing for me. So I bet about 1% of my account, maybe 2%, don't remember exactly, and yeah, I'm wrong. So today I covered the short, and actually this is probably good news for Bitcoin lovers, because it looks like we're gonna make new records. I think I'm gonna start buying it, if anything. So I have no problem. Once again, there's no ego in this. It's just money, really. It's like, it's just business, right? It's nothing personal. It's just business. So when you trade, there's nothing personal about this. It's just money. It's just numbers on the screen. Emotions really have very little to do with trading, in the sense of you just need to know how to control them, basically. And one way to control the emotions is to only bet the amount you're okay losing, you see. So I was okay losing 1 to 2% of my account. I would not be okay losing 10% of my account. All right, so that's for this presentation. Head over to MasterChartsTrading.com That's one word, MasterChartsTrading.com. Click on products, sign up for one of the products. So we have trading indicators and newsletters, and ultimate bundle. So indicators are these lines. You can use them to trade pretty much anything. Here are they used to trade Pfizer with a 26% gain. They're $30 per month. You can also trade any stock anywhere in the world. So on any of the exchanges, they all do the same thing. You can make the same trades. If you need my newsletters, I have an elite newsletter and a speculator newsletter. So in elite newsletter, we trade large caps, Forex, commodities, ETFs. In the speculator newsletter, we trade specific breakout patterns, like for example green sky. I have a position right now in green sky. I already showed it last week. So this is the type of pattern I like. It's called a breakout pattern. So breakouts, stock was in a downtrend and all of a sudden it broke out right there above the blue support resistance line. So I bought it myself. I bought options. So for example, for green sky, I bought them at $1 each right there on 11th of May. They're currently I sold a quarter at $1.35 here, a third of the options at $1.35, and now they're up about 50% basically. So overall, pretty nice trade. So speculator elite newsletter. Additionally, I have this what's called stock screener, so you can screen stocks for various things. For example, are they breaking above the blue support resistance line? In that case, you will be able to choose which of the lists you like. So lots of lists. My personal favorite, of course, is the all stocks with options right there, and I get about 140 alerts per day, and then I simplify and I cut down and I only send out alerts on the best ones basically. So this is speculator newsletter, and these are all the speculative stocks that come up. Additionally, we have the indicators now. This indicators for MetaTrader 5. We also have expert advisor that's coming for MetaTrader 5 and eventually for MetaTrader 4. So do sign up, send me a message if you're interested in testing out the expert advisor. We are looking for beta testers. All right, that's it for this week. Let me know if you have any questions. Thanks for watching. Have another great trading week. Bye-bye.